welcome back to the Business Buzz. You ready to dig into some more fascinating financial reports?
Always excited to see what we can uncover.
Yeah, this time we're zeroing in on PennyMac.
Okay.
Both PennyMac Financial Services,
Mm.
that's PFSI on the ticker,
Got it.
and the PennyMac Mortgage Investment Trust, PMT.
Okay.
So, got their earnings reports, press releases, a bit of market analysis.
Right.
Really, our mission today is to kind of figure out
Yeah.
how they weathered 2024.
Mm.
That was a crazy year for interest rates.
Oh, yeah.
And how they're performing.
Right.
And maybe we can get a little glimpse into what their game plan is going forward.
A lot to unpack, especially in the mortgage world where interest rates can really make or break the game.
Absolutely. Okay, so first off, PFSI is boasting a 16% annualized operating return on equity,
Wow.
which is not too shabby at all.
Not shabby at all. And what's really impressive is that they're achieving this in a year where a lot of lenders were struggling to stay afloat. That 16% ROE, compared to industry averages, really suggests that they're not just riding the wave, but they're actually skillfully navigating some pretty choppy waters.
Yeah, and their servicing portfolio just keeps growing,
Right.
clocking in at a massive $665.8 billion,
Huge.
which is a 10% jump from last year.
Definitely a sign of a healthy, expanding business.
Yeah,
Not only are they attracting new customers, but they're doing a great job retaining them,
right.
which is key in this competitive market.
Absolutely. Now on to PMT.
All right.
They ended Q4 2024 with a 10% return on equity,
Okay.
driven by, and I'm quoting here, solid income and strong performance across its investment strategies.
Okay.
But what does that actually mean?
Right.
What are these strategies they're using?
Yeah, well, they haven't explicitly detailed all their strategies in these reports,
Of course.
but we can glean some insights, for sure.
Okay.
Firstly, maintaining that steady dividend of 0.40 cents per share, despite the market being a little bit jittery, really shows confidence in their ability to generate that consistent income,
Right.
possibly through a mix of agency and non-agency mortgage-backed securities.
Speaking of jitters, we can't ignore the interest rate roller coaster that was 2024.
Oh, absolutely not.
I mean, remember when the 10-year Treasury yield was bouncing between 3.6% and 4.7%?
A wild ride indeed. And, those kinds of fluctuations can impact mortgage lenders and investors like PennyMac in a big way.
In what way?
When rates rise, the value of existing mortgage-backed securities, those bundles of mortgages, tends to drop.
Mm-hmm.
This is because investors can now find better returns in newly issued bonds,
Right.
which offer higher interest rates.
Makes sense. So how did PMT handle those rising rates?
Yeah,
It looks like they took some hits on their non-agency subordinate MBS.
that's right. Yeah.
What does that mean?
Well, non-agency MBS are considered riskier than those backed by, government-sponsored enterprises like Fannie Mae and Freddie Mac.
Right.
During times of interest rate volatility, they tend to experience more value fluctuations,
Okay.
which can lead to losses.
And it looks like they took some steps to kind of address that.
Mm-hmm.
It says that they issued $1.3 billion in term debt
Right.
and then also did some reshuffling with their agency MBS portfolio.
Yeah.
What's the strategy behind those types of moves?
Well, they're essentially hedging their bets.
Okay.
The term debt provides them with more capital to work with,
Hmm.
while rebalancing their agency MBS portfolio likely involves shifting towards securities that are less sensitive to interest rate swings.
Interesting.
It's all a proactive approach to managing risk.
Kind of like rearranging the deck chairs on the Titanic.
Well, let's hope not,
Right.
but I see what you mean.
Yeah.
In a tumultuous market, you need to adapt and strategize to stay afloat.
Right. And it looks like PFSI and PMT are working together,
Yes.
renewing their mortgage banking agreement for another 5 years.
That's right.
What are the benefits of this continued partnership?
Well, it's a win-win, really.
Oh.
This partnership allows PFSI to tap into PMT's expertise in creating mortgage servicing rights, MSRs,
Okay.
and credit investments from their production volume.
So they're leveraging each other's strengths.
Exactly. MSRs can be quite profitable, especially in a rising interest rate environment.
Right.
And PMT's ability to generate them from their own production volume gives them a competitive edge.
It's interesting how PFSI's diversified business model seems to be working in their favor.
Yeah.
Their servicing segment had a strong quarter, which helped to offset some of the challenges in their production segment.
Diversification is key. It's
Yeah.
a key risk mitigation strategy, especially in an unpredictable market.
Absolutely.
And you can see how that's reflected in their performance this past year.
Okay, so overall, some good news for PennyMac, right? But are there any potential red flags we should be looking out for?
Well, yeah, let's see. I mean, their financials are looking pretty good on the surface.
Right.
But one thing that kind of caught my eye was PMTs,
Okay.
upcoming debt maturities,
You're right.
especially those exchangeable notes due in 2026.
Yeah.
It seems like they're going to need to find ways to raise more capital pretty soon.
You're right to point that out.
Yeah,
That's definitely something they'll need to think about strategically.
for sure.
It's almost like, needing to refinance your mortgage.
Yeah.
Finding the right terms and the right timing is crucial.
Absolutely. And just like with personal finances,
Right?
managing debt is super important for companies like PMT.
Mm-hmm.
They'll need to explore options
Yeah.
and make decisions that really align with their long-term goals.
And of course, we can't forget that the mortgage market's future is heavily influenced by interest rates.
No, of course not.
And those folks over at the FHFA, right?
Exactly.
The Federal Housing Finance Agency,
Right.
for anyone who needs a refresher.
The FHFA's regulation of Fannie Mae and Freddie Mac plays a huge role in the mortgage market.
Huge.
Their decisions can really ripple through the entire industry,
Yeah.
impacting everything from lending practices to interest rates.
Speaking of impact, let's zoom out for a second.
Okay. Yeah.
We've been really deep in the weeds of PennyMac's financials.
Mm-hmm.
But what does all this mean for just everyday people?
Right.
What should someone who's maybe thinking about buying a home or refinancing right now,
Yeah.
what should they take away from all this?
That's a great question. This deep dive into PennyMac actually offers some pretty valuable lessons for anyone navigating the mortgage landscape.
Okay, I'm all ears.
Okay. Well, firstly,
Yeah.
PennyMac's performance highlights the importance of diversification,
Okay.
not just for companies, but for individuals, too.
Right.
Having diverse income streams or investments can really act as a buffer during times of economic uncertainty.
So don't put all your eggs in one basket.
Exactly. Spreading your risk can really help you be more resilient to market fluctuations.
Makes sense. What else?
Well, secondly, PMT's proactive approach to managing risk in that volatile interest rate environment is another valuable lesson,
Right.
just like they adjusted their portfolio and secured more capital.
Mm.
Individuals should also assess their own financial situations
Okay.
and think about strategies to mitigate potential risks.
So being proactive rather than reactive.
Exactly. Regularly reviewing your budget,
Right.
exploring options to manage debt, and staying informed about market trends can really empower you to make smarter financial decisions.
Okay, taking notes. Any other nuggets of wisdom we can glean from PennyMac's journey?
Well, their strong partnership really emphasizes the power of collaboration,
Okay.
seeking out expert advice,
Right.
and building relationships with trusted financial professionals
Mm.
can provide invaluable insights and support
Yeah.
when you're making big financial decisions.
So it's kind of like having a co-pilot
Yeah,
to navigate the complexities of the financial world.
absolutely. Whether it's a financial advisor, a mortgage broker, or even just a trusted friend who's savvy with finances,
Right.
having that support system can really make the journey a lot smoother.
It sounds like PennyMac's story offers valuable insights, not just for investors,
Right.
but for anyone looking to make more informed financial decisions.
Absolutely. By kind of observing how companies like PennyMac navigate these challenges and capitalize on opportunities, we
Yeah.
can glean some really practical lessons for our own financial journeys.
Okay, so we talked about diversification, proactive risk management,
Mm-hmm.
and the power of collaboration.
Right.
Any final thoughts on navigating this wild world of mortgages and personal finances?
I think the biggest takeaway from all of this is the importance of staying informed
Okay,
and adaptable.
right.
The financial landscape is constantly evolving.
Yeah.
What worked yesterday might not work tomorrow.
So stay curious, keep learning, and be ready to adjust your course.
Exactly. By staying engaged, asking questions, and seeking out knowledge.
Yeah.
You empower yourself to make good financial decisions.
Right.
And achieve your goals, even when there's uncertainty.
Well said.
Yeah.
It's a great reminder that we're all kind of in this together,
Yeah,
learning and adapting as we go.
absolutely. And, every challenge is an opportunity
Yeah.
for growth and innovation.
I love that. So as we wrap up this deep dive into PennyMac,
Yeah.
what's the one key question that our listeners should be asking themselves?
That's a good question.
Yeah.
I think the most important question is,
Okay.
what steps can I take today to make myself more financially resilient
Right.
and prepared for whatever tomorrow may bring?
That's a powerful question. It encourages us to really take ownership of our financial well-being
Yeah.
and to actively seek out ways to strengthen our position.
And it reminds us that financial success isn't just about luck or circumstance.
Right.
It's about making informed choices and taking proactive steps to build a secure future.
Well said. And on that note of empowerment and proactive planning, it's time to bring this episode of The Business Buzz to a close.
Time flies when you're dissecting financial statements.
It really does. Thanks for joining us on this deep dive into PennyMacs
Yeah.
and the ever-evolving world of mortgages.
It's a fascinating world.
It is.
And thanks to you, our listeners, for being on this journey with us.
Yeah.
Keep those financial adventures going.
We'll catch you next time for another insightful exploration of the business world.
Sounds good.
Until then, stay curious and stay informed. Yeah, it's been quite a journey through PennyMac's world.
It has.
Seems like they've got a lot going on. But...
Right, and we only just scratched the surface.
Yeah.
I think about like the rise of all these fintech lenders shaking things up.
Yeah, how are they changing the game?
Well, they're all about making mortgages quicker and easier, for people to kind of get their heads around.
Right.
They use technology to streamline the whole process, personalize the experience.
Yeah.
It's a whole different ballgame for borrowers these days.
Yeah. And then there's all this buzz about non-QM loans.
Oh, yeah, those are interesting.
What are those all about?
Well, they're basically opening doors for folks who don't fit that traditional borrower mold. They cater to the self-employed gig workers, anyone with income that's maybe a little less predictable.
Right.
And so expanding access to credit like that is a big deal.
Absolutely. But we can't forget the elephant in the room.
What's that?
What is going to happen with Fannie Mae and Freddie Mac?
Oh, right.
That whole GSE reform debate is still swirling around.
Yeah, it's a really complex issue with no easy answers. It's like, how much government oversight do we really need? How much room should there be for, private sector innovation?
Right.
Finding that balance is tricky, but it's crucial for a healthy mortgage market.
So many moving pieces.
I know, right?
But hey, that's the world of finance, right?
That's what keeps it interesting.
Always something new to watch, to learn from.
Absolutely. And, the decisions that are made today, those are going to shape the future of homeownership for millions of people. So it's a big responsibility.
It is. It makes you wonder what kind of innovations we'll see next.
Right.
What's going to be the next big thing in the mortgage industry?
Ooh, I'm on the edge of my seat.
Yeah.
But, with all the bright minds and all that entrepreneurial energy in this sector, I have no doubt they'll keep pushing the boundaries.
Right.
New possibilities for borrowers, for investors, for everyone.
Well, on that note of anticipation
and
excitement for what's to come,
definitely,
I think it's time to wrap up this episode of The Business Buzz.
Time flies when you're dissecting financial statements.
It really does. Thanks for joining us on this deep dive into PennyMac and this ever-evolving world of mortgages.
Such a fascinating world.
It is. And a huge thank you to all of our listeners for being on this journey with us.
Keep those financial adventures going.
We'll catch you next time for another insightful exploration of the business world.
Looking forward to it.
Until then, stay curious.
And stay informed.
And we'll see you soon.